Good evening, everyone. It's Mark Woodward with Marketwise Capital. It's the weekly review of week ending July 27th. And as always, we'll take a look at the market. We'll take a look at the different sectors and world regions, as well as some detail look at particular stocks of interest. And as a bonus this week and weeks forthcoming, we will review the portfolio as we have the picks that we have made in the past weeks. So let's get into it. From the market perspective, we have moved into a bull quiet mode over the past week, which shows some opportunity that we broke that 280 level that we anticipated, and now we're trying to test those February or late January highs as we move into the summer season here into August. From a regression line positioning, we are just curling over, which could be an indication that we could have a few day downturn. Same thing with our risk Z-score, which is a measure of the VIX moving average 30 over the moving average 10. But we're still in a risk on perspective. That sell-off on Friday gives us a neutral position on the NDX 10, so it's still overbought from a yearly perspective, but on a short-term basis, we're still on. We have now sold off into a neutral position. We are at about 4.8% above the 200-day moving average. And so the overall assessment here is cautiously optimistic. If we do see a particular rollover on the RL10, we'll turn slightly neutral as it tries to figure out if it can maintain above the 280 level. From a historical perspective, we are on the risk Z index, still nothing out of the ordinary. We're still in the 1.0 or 1 index when we look at the last 5,000 trading days. So nothing to worry about in that perspective. When we look at the SPY in detail, as you see, we hit the 1 standard deviation above and then started to roll. And we're possibly going to cross back over that RL 30 from a standard deviation perspective. So that's this 0.20. We've seen the rollback here as we've progressively moved back downward. So we're interested in this right at this moment because there could be a pullback over the early part of the week, and monitoring that closely to see if it continues. When we take a look at some stocks in detail, we will go to the world index as we always do to start. As I've mentioned in the first couple of videos, we still like Latin America, and as I mentioned, we do like the European and Asian. And you start to see that turn as Latin America was up 4% in the past week. The world index was up 1%. Asia was up 1%, and Europe was up 1%. But you start to see a little bit better move here. We did see, obviously, with the Facebook and the Twitters, some reaction here for the Qs, and that has now turned it into a risk-off position. When we take a deeper look into Latin America as being our leader, you'll see the dramatic jump here in the strength index as it made this solid move over the last 20 days to 13% remove. As you may have noticed back in earlier videos, we took a position here when there was a crossover on the 18th, and we've subsequently had a nice return for that. Europe was the same kind of camp. When we had the crossover here on July 5th, we saw weakness in the SQN, same time period. and took a nice position there. So we do see still some running room. We do see a potential on the 4-day moving average, some turnaround here on the strength index for Europe. When we take a look at the asset styles, which we haven't typically looked at on these videos, you start to see that shift that you may start to hear about, is that the growth was a big sell-off last week, having been a pretty good leader in the past 200 trading days, much more so than the mid caps, both value, the Russell as well as the S&P mid caps. So that shift may occur. We'll keep an eye on that. Value is starting to rise from a quality perspective. Or there could be an opportunity to jump back into the small cap Russells. When we go to the sectors, as I mentioned in prior videos, we really like the industrials, the financials. We did kind of pause on staples, but we may be getting back into that. And the home builders, the real estate, metals and mining have seemed to still be in a tough position. So when we take a detailed dive, let's just check detailed dive of what we like. Over here is consumer discretionary. We're not a huge fan of. Real estate we're not a fan of right at the moment. Technology we're not a fan of. Kind of neutral on healthcare and utilities. We still like the industrials, financials, and materials. And there is a good upside here, or what's called emerging dragon, on the staples as well as the energy. So our focus as we look for stocks are in those particular areas, since we are still in a bullish time frame or mindset. So Halliburton we'll take a peek at, Western Union, State Street, JB Hunt for transportation, and then in the healthcare space, Cardinal Health and ZTS. While we're here, we'll take a peek at the portfolio as to where we are today. We're in a 90% cash or invested position. The recommendations that we've made on prior videos, the first video that we took a peek at, we've done fairly well with CAT, although we are going into earnings with that, so that may materially change for the better or for the worse. CSX had a nice return of 6% since we recommended it, and Boeing's has been the leader at 7%. To read this report, this is the return that we had since the recommendation, and when we made the purchase, this is the return of the market since that particular day. The other ones that we mentioned in the second videos, Lam Research, Tencor, Broadcom, Schwab, Constellation Brands, which is our weakest position, FedEx, and Latin America, have all performed awfully well, about almost a 5% average return versus a 1% or roughly 1.2% return for the market. We did add a couple of additional positions. We added to our Constellation Brands, although I'm not sure that's necessarily the way to go. And Cigna we still believe has got some potentially a 4 to 5 to 1 ratio of risk to reward. We did have some shorts that we recommended. Monster Beverage, we are still short. We sold it went short at 61.22, and we got a nice bump there on Friday to be in a profit. We're up about 1%, while the market is up about 1%. Southern Company, we had to close because we got stopped out at a negative 1.2. And Goodyear was interesting because it clearly was in the camp of a buy, but the chart looked so poor and falling out that we talked about it from a trade, trade long, but then we saw that earnings were out on Friday, and we did not take a position because of that already beaten down market, and with earnings coming out, could have a dramatic swing, which it did. It was up 9% on Friday. So that's where we stand from there. Let's take a quick peek at where we are from a market perspective. We always start with the SPY, as we have noted in the past. A couple of support levels here. We're about to probably create another support level here off of the top of support levels. We got through this resistance area at this top of this RL10, so therefore it was free run all the way up to the 284, and as you notice, we've hit that now a couple times and have found some resistance. We'll see how the next week goes. We clearly, from a price channel perspective, are in the overbought category. However, as you've noticed in months past, it can stay up there, so that's something that we want to monitor. However, the MACD 1030 is now crossing over, so we're a little reluctant to put on additional trades, in part. So we may close this position if this does roll over on Monday. Quickly go through some of the ones that we talked about. That's Boeing, crossed over, still running. Don't have a problem with that position right at the moment. Caterpillar, we'll see what the earnings produce. We expect good things. Same thing with, as you may have noticed, the big sell-off in Caterpillar in the first quarter. We anticipate this is probably right here for that sell-off. We're in a different position now, so if they say anything positive about the trade war, this thing could have a nice jump. CSX, we were in a losing position, and then until earnings, and now it's run. We'll wait to see if that wants to continue or if it wants to fall over. I won't go through all these. Some of the negatives, though, is Constellation Brands. It's just kind of steady, and when this happens, that could be a consolidation for the support, or it could be a consolidation at the resistance. And so we'll be quick to make a trigger here as to be in or in more or out. We still like this from an ability to reach back up into the 235 or 230 level. Some of our winners, you mentioned Schwab. We got lucky with the earnings there. And FedEx just seems to be a slow growth every day. As we cross over the zero line on the MACD, we still believe that this one can at least get up to fair value at 255 or even all the way up to the 265 range, where we feel is the next real resistance. So the ones that we focused in on the earlier part, let me just show you Cigna. Cigna, we've taken a position as the crossover here. We took another position as it emerged. We do like this. However, we are coming up onto the price channel, and as you notice, it's failed multiple times at the top of the price channel. So we're hoping for one of these. We still feel there's a lot of consolidation here and an opportunity to break out. We'll keep a close eye on that. We took two positions that we don't typically take, but they were in the news. The Northrop Grumman, after their earnings miss, we felt like that was too much of a dramatic dip, so we did take a position here on, actually we took it on Wednesday, so there should be a circle here in which I believe we took it at 297. And then we took a position in Twitter for the sheer aspect. We were at 34. I believe 34.57, and we believe this. We've never seen such a drop here on a price channel. And every time that it's come down here, it's responded. So these do, I'm sure, happen, but not in Twitter. We feel like there's a good risk reward here. We do see kind of a support level pretty much right where it closed at the end of the day. we're going to give it a little run for the 3-day rule. But we feel like this could be easily a $40 stock in 3 or 4 weeks. The ones that we do like this week, a Halliburton is setting up perfect. We're in a narrow pinch. This thing rolls up on Monday. We will take a position. We do like energy, and this one is sort of beaten up in the energy business. The other ones that I mentioned, State Street. State Street needs to curl just a little bit. If it's open, it opens or is priced up above Friday's close, we'll take a position there. Cardinal Health. Cardinal Health is same, has a pinch going on. Didn't necessarily hit. We could have taken a position a little bit earlier. If this breaks this top of the Bollinger Band, I really like the possibility of this being a good long-term position. We also mentioned Zotis. This is consolidation period. We may not get a whole lot out of this, but we do believe that there is a good opportunity. This is almost rolling over on above the zero line, which is one of our favorites. Western Union's interesting. Western Union is in this consolidation phase, has crossed over. Should have taken a position on Friday. Will take a position on Monday, assuming that the market doesn't any news over the weekend or tweets. But financials has responded well. This has not. You could call this a service business. You could call this a financial business. But either way, I think we've got some possibly good upside here. JB Hunt in the transportation side of the house. Same thing. We found interest back here. It failed. We didn't take it. If this thing rolls up, I think we may have some good consolidation. If you look across, you'll see support right here off the RL10, and it's hit that 4 times. If it drops there again, I might buy it on a day trade, but also look for it to keep for a long-term trade. Oracle looks to us like a great short at this point. I know they had great earnings in relation to the street. We just feel like this is done. The last 4 trips above the price channel have all been failures afterwards. We think this is a good opportunity to short on Monday, which we will do. We did not take a position here yet. We're monitoring that one. And the same thing with Edison. We will not take a position there until we figure out what utilities is really doing. And I believe that's it. The rest of these are just watches. We feel like some are beat up. Tyson's Foods, we did take a position here at the crossover. This is an interesting one. It's in the staples side of the equation. Same thing like we saw with an earlier stock. This has the ability to possibly make a run in a sector that's already ran away from it. So we will monitor that as well. If you really want some shots, News Corp. Nielsen is up here. Nielsen got absolutely abused. Same type of thing, way below its price channel. Is there opportunity here? These are a little bit higher risk, but something that you can take a peek at. So those are our focus stocks for the day. And I guess we whip through these, right? The materials we still love, the breakout. Industrials we've been fantastic with. Technology, we are closing that position. Staples is interesting because it's hitting resistance, broke through the resistance. This becomes the emerging dragon, so we could, if there's run to safety, that could occur. This is the utilities. Utilities is still trying to figure out if this is a consolidation phase. This is the healthcare. Healthcare, we closed the position, could actually rebound all the way up to the 90 level. We're trying to figure out if this is a failure or a failure to fail further. Emergent dragon. This is the consumer discretionary. This looks to us like a short, but we are not necessarily playing that. And took a position in the mining. Mining is still trying to figure out. We're still in a winning position there, but we'll have a tight stop. And then retail. Retail, I believe, has the chance to fail here. Energy, one of more favorites. Look at the tight consolidation. This thing breaks. It's going to break well, and it should break all the way to the top of 78 or so. So we can get a 3-point or 5% return there, I think, over the next few weeks. Real estate, another safety play. Depends on what the market does, but we also believe that this one, we took a short position a few weeks ago at the crossover, and we're going to maintain that. So I think that's it. Have any questions? Feel free to email us at marketwisecapitallllc@gmail.com, and I look forward to the week ahead. Good luck in trading.